Hello, this is Siwin Yi. Welcome. And today we're going to talk about if you make six figure income, like for example, 300,000, $400,000, $500,000 of W-2 wage income or net self-employment income or what have you. And if you want to pay very little taxes, well, just listen real closely. All right. And in addition to that, if you want to pay close to zero in federal income taxes and also state income tax, and the next assumptions that I would like you to ideally have is if your spouse have no job or part-time job. The third criteria, as I mentioned, is that you earn a huge amount of income and you're sick and tired of paying IDEC, writing a check to the IRS on April 15th of every year. The higher the income, the more taxes you pay, and that's how it goes, unless you do this. All right, and unless you buy rental properties. The rental property is there are four ways to make money buying investment real estate. And today, for a few minutes, I'm only going to go talk about one of the components, which is, as you can see here, real estate pro status. There are others that may or may not apply to you: passive losses, depreciation, cost segregation, and a few other things. Yes, that's right. If your spouse is really willing and able to become a so-called real estate professional, that's a tax definition. That is not a occupation definition. And yeah, if you're willing, if you have the several $100,000 to buy 4, 5, 6 rental properties with leverage, down payment, 25% down payment, ideally, single family home to fourplex, ideally. If you can do that, if you can systematically buy, scale your real estate portfolio in a shortest periods of time by your spouse becoming a real estate professional and he or she have no other jobs, and as long as he or she makes or is a material participant in taking care of the properties. It's only like 15 hours per week, 750 hours per year. And the spouse that qualify to become a real estate pro with all the unlimited passive losses can be used to offset your earned income. I say it again, all the unlimited passive losses, all the paper phantom depreciation write-offs based on the amount of rental property you purchase, and if the spouse is willing to become a material participant in the management of the rental property portfolio, and based on the total amount of the purchase price, and apply the depreciation method into each property, in addition to cost segregation on top of that, then the passive write-offs can offset against earned income and your 37% federal income tax bracket. And if you live in California, for that matter, you're subject to a franchise tax board of maximum of 9.3%, if I'm not state tax rate. And if you live in a high cost area such as New York State, similar. It doesn't matter where you live in the country. So again, I'm not a tax advisor. I'm a real estate consultant advisor, and we've helped many, many highly compensated individuals to substantially decrease the working spouse huge income and the taxes. Of course, we work as a team. We have tax advisors and other financial planners on our team, and the realtors and loan agents, all those tax advisors. And that's what we do. We work as a team to help individuals that qualify. All right, so that's all I have to say. That's pretty much it. Thank you so much. This is Si Wing Yi from the Evolution Network. Have a nice day. Bye bye.